So if we look at the daily chart here, I have a high noted, and that high was a potential target today. The highest up close green candle's closing price, that being right here, that was also an intraday target. And then we have this wick here. We split that in half. That's a target. This is a target. This wick here, split that in half. They're consequent encroachment objectives. But this closing price here is a rejection block. This drop down with this candle's low, this candle's high, this is a fair value gap. Its classification as a fair value gap is a SIBI, sell side imbalance, buy side inefficiency. The market trades up, leaves a small portion here on Friday, and then we have new week trading Monday today. And I'm taking my attention back through this candle. Okay, now folks, listen. So there's a lot of folks out there that like to say what I'm teaching is a relabeled version of supply and demand. It's neither supply and demand or classic support and resistance. Here's the thing that you need to understand about what I'm teaching. Supply and demand and their supporters and people that promote that idea will say don't cut through candles. They want fresh zones. Okay, I don't deal with zones, I deal with specific levels. And I'm cutting through this candle. I'm looking past it. I'm going right back to this candle here, which is what I taught on last week. Midpoint of that is consequent encroachment. 39.82 and a half. Okay, so that level, I'm going to project that through. Now what I'm showing is the look back with PD array matrix. So we're looking at specific candles looking back in time 20, 40, 60 days. So the highest form of sensitivity in these key levels are going to be within the last 20 days. After 20 days, the market may respect those levels. I'm more specifically aiming at newer PD arrays within the last constant 20 days. Look back. So the range of the last 20 days is what I'm basically focusing on. So key levels that would be fair value gaps, order blocks, breakers, institutional order flow entry drills, consequent encroachment, mitigation blocks. All those things, rejection blocks, old highs and lows, they're going to be salient to my preferred setups. And we're looking for that in my specific market. So right now I'm obviously focusing in on E-mini S&P. So that idea, that midpoint of that gap, that was the focus of what I was looking for this morning. And I started the day with giving you a chart on Twitter. And you can find my official Twitter account on the YouTube channel. Go to the main page, look in the upper right hand corner, and you'll see that is the official ICT Twitter account. If you're not finding it from that link, you're probably watching someone else that's not me. Okay, I'm not going to sell you anything. I'm not going to take you to a Telegram channel. I'm not going to invite you to a Discord. I don't use WhatsApp. So if we watch this level here and project it forward, so here's the level, and I wanted to see it open and then trade down to that level and then create a candle that runs up into this swing high. Now, admittedly, I was expecting this entire range to fulfill over the course of the morning session, consolidate during lunch, and then run up into that level here during the PM session. I would have been back in the last hour or so to show you an example of that being ran out. The market decided to do it all before lunch. So we saw the market rally up, obviously, and we want to see if it can have the ability to get through all of these levels here. This fair value gap high, consequent encroachment, rejection block, consequent encroachment, and then finally into the buy side liquidity here. So there's thresholds, okay, that levels each time the market goes higher, measuring whether or not it has the potential, momentum, energy, you might refer to it as trend. Does it have the likelihood to reach through those levels to get to liquidity up here? Now, if you look at the fair value gap I've outlined here from this candle's high and this candle's low, extending it out in time, you can see we dropped down into that last week. Had a nice energetic run away from that on Friday, leaving a fair value gap here, trading up into that, ramming it through, and then reaching for buy side. So with this logic in mind, I want to take a look at the intraday charts, because that smash above that 40.35 level was just brilliant today. That concept is my power 3. I internalize the daily range like this. So I'm looking for an expansion to liquidity or an imbalance above the marketplace if I'm bullish, or an expansion to the downside to a old low or an imbalance. So those are the two main decision points that you have to make. Are you bullish? Okay, if you're bullish, what's it reaching for? An imbalance or an old high or relative equal highs? That's very simple, folks. Very, very simple logic. If you're bearish, you're looking for the opposite. You're looking for the market to trade down to an old low or relative equal lows for sell side liquidity, or it's reaching down to an inefficiency like a fair value gap or something to that effect. Very, very simple. So right away you're deciding, does it want to likely go higher? And if it's going to go higher, you're looking for it to go to one of two things: inefficiency or liquidity above old high. If it's likely to go lower, you're looking for one of two things. It's going down into a fair value gap for inefficiency to reprice to that, or it's going to run out below an old low or relative equal lows for sell side liquidity. That's it. Those two major questions, bullish or bearish, either or, then it's inefficiency or liquidity. That's the algorithm. That's what it's doing. So once you determine what it's likely reaching for, it helps you formulate the narrative, which is using this mindset here, what I was expecting to see over the course of the daily range. You formulate your engagements based on price action and the PD arrays that form in the lower time frames. So the daily chart here, we have the rejection block here at 40.55 and a quarter. The old low, this is what we just referred to, at 40.35.25. And then here's the consequent encroachment of that wick. As I mentioned last week, opens, trades down to it here, and then rallies, expands up through the high there, and even reaches all the way over to the rejection block. Okay, so I'm adding this in here. Admittedly, I didn't expect to see this today. I was just thinking this would be the daily objective, and if we were going to stop short of that 40.55, I would have expected that tomorrow or overnight, and I would have mentioned it today in this commentary, but it decided to do it all in one day. All right, the hourly chart. You can see the buy side liquidity, relative equal highs here. We have consolidation. Market leaves the consolidation, trades down to smart money reversal, low risk buy, accumulation, reaccumulation. Now this right here, this area here, is a little tricky. And I mentioned this morning that we hadn't really done much overnight, and we wanted to see it trade to the 9:30 opening. Admittedly, I was looking for it to drop down into this area here and then do everything you're seeing here, but not to the 50 level, but to the 40.35 right over here. I wanted that liquidity taken out in the PM session. Because we consolidated overnight and we already ran above the short-term high here of relative equal highs, see that, this high and this high here, it runs above it and then drops just a little bit below that low. In my opinion, what I was looking for is a little bit deeper run below that after 9:30. And we'll look at that in a moment when we get into lower time frames. But for now, I want you to just consider how this was just really narrow and not much of a deep retracement below that low. So it was too much of a consolidation for my liking. And it was problematic for me to just go in and go long. Now, had it done a deeper drop below here before 9:30, I would have went in a little bit more aggressive and went long on ES. One I'll show you when we get into lower time frames. But because of the fact that we had consolidated almost sideways perfectly in such a small little shallow drop below that low, I was unwilling to take any position. So I took no trades today, absolutely nothing. And that's fine. But the point is what I was looking for hinges on the fact that we were not willing to go down a little bit more than we did. So when I get students ask me all the time, when it comes to missing trades, do I miss trades? Yes. Yes. In fact, I miss a lot of trades because there's a lot of trades that I may see forming that I'm not interested in pursuing or participating in. For various reasons. I may not be able to manage the position once I get in it. I'll be preoccupied with something. My wife or my children draw my attention away from the marketplace. I don't feel well, I'm tired, or I'm just simply not interested and I just want to watch and see what it does. So it's a wide array of things like you're going to encounter as a trader that keeps you from taking a position. But I was watching it live today and I was mapping out the 5 and 1 minute chart and annotated them and sharing them on my Twitter feed. Now I'll let you go look at those charts. That way you can drop the charts or the links from those tweets right on your TradingView chart on a 1 or 5 minute chart. And you'll see exactly what I'm making the comments and what that chart looked like from my end. So you can kind of like match it up. That's the work. A lot of you aren't going to want to do that. And that's unfortunate because you're going to miss the opportunity to learn a lot. I'm doing it this way until we start our live sessions because obviously it'll be a lot better when you can see me talking about very specific things in the chart and what I'm looking for real time and more dynamically. And I'll be able to say it easier and faster than annotating a chart, cut and pasting it into Twitter, and then waiting for that delivery to get to your phone or device. So, but I'm doing it to keep you engaged, do your own studies, go into your charts and mine these things that I'm showing you. So anyway, we're gonna look at this consolidation here on lower time frame. Here is the 15-minute time frame stretched out a little bit more. You can see that low and this low right here. There's a fair value gap right there. This is what I shared on Twitter, this one and this one here. Okay. And I mentioned that I favor this one. Now, I don't believe what I'm about to say is going to be hard to understand because if you're a student of mine, you already recognize what this is. Original consolidation, distribution, redistribution, smart money reversal, low risk buy, accumulation. Somewhere in here is going to be reaccumulation for a market maker buy model that clears out the original consolidation. So I'm looking for this to drop down for a second stage reaccumulation. So some kind of a important low will form. And I was willing to wait for it to drop down into this. I was preferring it to do that. The times that I do those types of forcing the market to come to me type event, I run the risk of missing the trade. And that's okay. Because I'm going to show you how eventually you see in my tweets that I flip right into what I'm looking for still, but anchoring it to a breaker with a fair value gap inside of it. So we'll get to that in a moment. But I was wanting this first. I favored this trading to first, then using that as a springboard, running up into this area here. And then I would have been hopefully seeing it consolidate or retrace away from that going into lunch, noon hour to 1 o'clock New York local time, and then resume going up, for another leg higher. The fact that it delivered all in one complete swing like that, it was fun to watch, but it wasn't enough for me to participate in because it had already delivered the lion's portion of the move. If you look at the 15-minute time frame here, I'm really zoomed in so you can really see the fair value gap. And at 9:30, I wanted to see it spike down into that, clear out the sell side here, which would have been great because we had this low, and the fair value gap. So if it would have punched down into that, I would have went long right in that stab of this fair value gap on its own. By itself, I would have done that. I would have had no fear in doing that because I felt strongly that that 40.35 and a quarter level was going to be targeted today. And I wanted to see the initial objective, this fair value gap here, which was 40.12. I think it was and a quarter, so 4012.25. But we'll just say 4012 for the sake of argument. And the market rallied, just kept pressing up into that after having a little bit of a sloppy open at 9:30. Ultimately delivering up to the 40.55 and a quarter level, which is the old rejection block on the daily chart.